Good morning, everybody. It is Thursday, November 14th, and we're going to start our prep uh, ahead of PPI today. Were you more prepared yesterday after the video we posted, or are you still churning trades and keeping your brokerage company alive by giving them endless commissions? Do you want to change your trading and improve understanding where price is likely to go, who's in the market, reading the market from a business standpoint, and understanding what is likely going to hit the tape far ahead of the day even begins? If you do, then stay tuned to these as we're going to do them daily. Congratulations also to many of our students that did lock in a solid day yesterday by being the most prepared in the market, as we had three 20-point trades that were all very clean, very nice. So if we look at yesterday's price action here, and we'll put on the session for CPI, we had mentioned that insurance providers in the market would push the market up, but unlike times in the past, we weren't extremely overinsured, so there wasn't that amount of capital flowing into the market, or the example we used yesterday was into a city. And so we had a little bit flowing in, pushed us up to our 30 or 60-28 level, 60-30-28 there. And then once that was done and the insurance providers made all their money, then we came all the way down to our low end. And then we made a nice move off our 6,000 level back to 60-36. And then again, we found our resistance at 60-28 for the other 20-point move down back to 6,008. Tesla did give a nice confluence trade for 25 points. We did mention this all week on these sessions, that this 348 and then 328 to 26 level were going to be your biggest areas to watch. And yesterday we had the sell-off at the open. And then when we held that 326 level at 11 o'clock, that's what propelled the market higher. And we saw that in our move from 6,008 up to 35. So about 27 points there. And again, these are the levers that are getting pulled in the market. This week has been a repositioning week after markup. So we made a big markup last week, and now this has just been repositioning, and the market's been cleaned up very nicely. So if we look at our overnight session here, we opened inside of yesterday's range and value, and all of the overnight trading has happened there. We do have market makers in the overnight session. It's 60-24, we have our shortest term, and as that changes their dynamics of the day. And again, these market makers don't want to be in the market in Globex as the volume is light, but they will have key areas that they step into so that it doesn't throw off their business plan for the next day. And so at 6,004, we had a large bid in the market from the weekly side of the market makers, and that is holding up our overnight session. From positioning, our longer term commercials are still short based on the COT report we had last Friday. We won't know that until after the market closed tomorrow. Short-term market makers are in compression mode, which is where they want to be ahead of any major catalysts, which yesterday was CPI, today is PPI in about 40 minutes, and then we have PAL at 3 p.m. Eastern today. This side of the market, again, they've done a great job cleaning up the market after last week's push, and they've now given themselves substantial breathing room to the upside compared to where we started the week. Longs from last week, if we see where we've come from here, are still mostly in the money. Friday, you are either neutral or down a little bit. Shorts from Monday are in the money, but that 60-36 would start changing that. And that's our big level to watch for today. From our flow standpoint here, we do have a $1.5 billion bid in the market as long as we hold 6,002 to 6,033. And then that kind of goes away, but doesn't really turn into anything until we get up to 60-70 to 60-80. It doesn't turn into a sell. Over 60-40, anybody short from Friday would be margin called, bringing some upward pressure in the market. And still, same as yesterday, around that 6,084, we have about $6.5 billion today sitting. The big change is all the money now is sitting up at 61.31. So they've done a great job cleaning this up, but now this is showing that there is interest in higher prices. Short-term commercials are in risk compressing mode, as we mentioned, ahead of big data. And short-term fund managers are signaling there's really no risk for PPI today, saying that they're looking for upside or sideways, which means that our tail risk becomes a move to the downside. So in terms of volume, we have been decreasing. The last 2 days have brought us back to average, and we're seeing some small signs of life kind of coming back in, but it'll take a little bit. Volatility is in the desert today. Volatility is going to be as hard to find as water. And as volatility clusters, the same way that gold clusters in Africa, as Mandelbrot taught us, we want to pay attention to that. And so if you know the bucket and you know how to use this, then you're prepared for today. That is something we go through with our students. Tomorrow is a major day for risk and positioning in the markets. Beyond that, we will have averted the biggest risk window of the last couple of months. And for a few weeks, then the flows will turn positive as we head into the end of the year. So today is the chance for Chicago or New York to move the markets if they want to. This means that if we want to be prepared, we look for a move outside of 60.36 for a directional move. To the downside, that would be a move under 59.97. But before we try to guess if the train's going to go, let's make sure first it leaves the station. So we'll expect the market to continue on its path this week, moving between 60.36 and 59.97, 6,000. That area is what we'll expect more of here, which tells us to look for a short at this 32 or 24, and then a long at that 97 or 10, and then only wait until we see a clean move outside. So our pivot for the upside move is 6,008 to 10. Our pivot for the downside move is where those short-term market makers are at that 24 to 27 level. Over 36, then we've changed the shortest term market makers and changed who is in the market as well. So getting over that, we'll target 60.48, 60.64, and 60.84. And if Powell's dovish enough, possibly 60.96. If we get below 6,000 and confirm on PPI, as that would show that then the fund managers underestimated this, then that's going to change what they do for the day. And our medium short-term market makers will be in risk absorbing mode. This will push us down where the phones will begin to ring in Chicago to step in and bring in all levels of defense at 59.54. But with average volume and no real catalyst until the very end of the day, this becomes our least likely scenario. Hope you guys are prepared. Stay tuned for more and have a great day trading out there.